Hey, how's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. Today's topic I want to discuss is for dummies. And rather than the word investment, I want you to always think of the word leverage. Okay, and that's very sloppy handwriting off my pad, but I always want you to look at it as how exactly can you leverage your money to get the best possible result. And that's the way that you should really look at, okay, how exactly an investment is you're risking some sort of money to place into something else that should grow to produce a better outcome. So if we could leverage the money but eliminate the risk associated with typical investments and still get you to the end result, that will make you more confident. This will make you much better when it comes time for retirement, or much better if you're planning on investing for something and you want to eventually have a vacation, or whatever that goal is. Whatever this goal is, that's exactly what you want to utilize for that specific investment. So today I'm going to go over what traditional investing has taught you and why it has not been working. And if you've looked at videos, you've looked at financial magazines and all this stuff, and exactly where they're pointing you towards, and why I disagree with majority of it. And one of the things that I do, and whenever you look at my company, it's I utilize a lot of safe strategies, a lot of safe, consistent planning, and it's slow and steady will win the race every single time. And you have to make sure that you're leveraging your dollars properly. So what traditional investments tell you is, buy stocks, buy mutual funds, diversify mutual funds. Okay, make sure that you don't have too much risk associated with it there. Max out your 401k, defer your taxes, put your money in the market, and you're going to get a good rate of return. Remember, return is always that key factor that everybody harps on. Well, there's a risk associated with every single one of these things that traditional investing has taught individuals. And the reason why I really want to make this video is because I deal with individuals off of my retirement income planning constantly from ages 50 and above that they were doing this their entire lives, and now they might be in their 60s and they utilize too much risk, and they utilize too much of these types of plans where they were maxing out their 401k. They were throwing everything in mutual funds and stocks and bonds and all of this, and now they've noticed their accounts are doing this number constantly. So what I'm going to do is I'm going to reveal to you exactly why I disagree with this, and show you step by step exactly why, and then show you a better alternative, the same alternative that I utilize for my own type of planning. And hopefully you guys will be in the same exact boat, and I could at least educate you and try to explain to you why I chose my type of planning the exact way I did. Now, whenever you buy stocks or you buy mutual funds or you max out your 401k and you're just looking for that rate of return, there's a risk associated there, right? With any stock or mutual fund, you could gain as ever high as that mutual fund or stock gains, but you could lose if that stock goes down to zero. Bear Stearns was a very big example. I'm not trying to bore you and throw statistics, but you had Bear Stearns that was right before they dropped down. They were at $60 a share, and they went all the way down to $2 the next day. And it was all these individuals that say, okay, I have millions of dollars or hundreds of thousands of dollars in my Bear Stearns stock, and now it's pretty much worthless. And I noticed that huge jump. And so as good as the stocks and mutual funds could be, I understand, and I want to make sure that you participate in those types of returns, but you eliminate the risk. Another thing is max out your 401k. Individuals were always taught this by their parents, and to say place as much into your 401k as possible, because you should get a tax deduction, meaning that anything that you contribute into a 401k account, whatever you place in there, is going to be deducted from your taxes that year. But they're going to grow deferred, and when you actually take it out, it's going to be fully taxable. Now this is a problem, and let me pull up the marginal tax rates to prove exactly what I'm talking about. This is a chart from ForbesAdvice.com, and what it does is it shows the historical tax rates. If you notice over here, the top marginal tax bracket, you had the top marginal tax brackets in the 1950s were upwards of 91%. 1960, 91%, 1970, 70%. Now, 401k accounts became very popular right around 1980s. So this worked out very well for individuals that would place money into a 401k account, allow that money to grow off of whatever the mutual fund performance did, and then right when they're in their retirement years, they're at a lower tax bracket. Everything worked out perfectly. But what happens if you have about 20 years, 20 plus years to retire? Or 15 plus years to retire? What do you think is going to happen? And regardless of whatever, if you're a Democrat, Republican, what do you think is going to happen regarding the tax brackets, regarding the tax rates? There's an economic deficit there, and we need to pay it back somehow. And if you notice, from 2003 all the way to 2012, the tax bracket, the highest marginal tax bracket, was 35%. Well, just this past year, it jumped up by 4.6% in 1 year. What do you think is going to happen regarding the deficit, regarding everything that's going on? So essentially, the plans that were set up to deduct your taxes now to pay full taxes later on, that's not going to be working. That is something that I want you to be completely confident and understanding, okay, how could I receive something that's going to be tax-free? So regardless of however this chart goes, basically moving forward, you will not have that that worry. And this is kind of the illustrative version of the chart of exactly how high it is and exactly how low it is, and where do you think it's going to go from there. But essentially, I want you to be confident with your plans, be confident with your investments, and try to take out money that's going to be tax-free for either retirement or tax-free for that later date, so you can leverage your dollars much better to accomplish your specific goal. So in just showing you the marginal tax brackets, understand that maxing out the 401k, focusing on deferring taxes later out, that is already one negative that's going to occur to individuals that are utilizing that old traditional type of planning. Now, buy stocks, buy mutual funds, diversify in mutual funds, always look at your rate of return, essentially because the market has always increased throughout the inception of of the stock market. It has always shown throughout time that the stock market has always increased. But there are certain reset periods, and on average, it's about every 7 to 8 years, there's reset periods in the stock market. So if your money is doing well now, and then all of a sudden you're in your 50s, you're in your 60s, and you have that reset, that's essentially what happened to all individuals, all retirees that were trying to pull money out of their stocks, out of their mutual fund, out of their 401k accounts in 2008. They received that negative 57 average to their portfolios. But you have to understand that the concept of leveraging the market is very, very good. You want to beat the pace of inflation. You want to participate in something that has proven throughout time to always go up. But once again, how exactly do you eliminate the risk? And this is something that, because I've constantly dissected different types of retirement plans, different type of retirement accounts, and really seeing the most successful people out there and seeing exactly what they are doing, and dealt with the best tax advisors out there, how exactly, when I was doing my planning for me and my wife, what exactly can I do to make sure that my money is going to be leveraged the best possible way for my specific goal? My specific goal was I wanted to retire young. That's exactly what I want to do. Regardless, I always want to, I want to travel, I want to do all these different things. Well, that's when I stumbled upon something that I deemed in-house as an accumulation insurance contract. And these things, I've never been more excited about these type of things than recently, because you had a couple of proprietary relationships, a couple of proprietary companies that created a very, very nice product line with these accumulation insurance contracts, and we can actually offer them through a Fosse Financial Group. Now, what do I mean by this? Well, rather than take your money and throw it directly into the stock market, where you have that, you could participate when it goes up, but also participate when it goes down, what these insurance contracts do is it utilizes indexing strategies. Okay? Meaning that you can Whenever the market goes up, you could have a participation in the market. Whenever the market goes down, you're going to have a gain of 0%. You will never lose your principal with downward market losses. So it allows you to participate in and capture that continuing upward trend regarding stock market performance, regarding indexing performance. But it eliminates that downward market loss that has destroyed retirement accounts, especially in recent years. So what I do is and also one of the things that I really like about it is I set up something that's systematic. It comes out of my paycheck. Even though I own the company, I basically also pay myself. I have this plan come out of my paycheck every single month to make sure that, you know what, this is just one of my expenses. This is just one of my expenses. But in the back end, the monies that I'm leveraging is going into this account, and it's growing whenever the market goes up, flatlining whenever the market goes down, growing, participating whenever the market goes up, flatlining whenever the market goes down, and it's consistent. It's consistent contributions at every time. So the money that I place in and the performance of my account equals my end result, equals what that bucket of money is going to grow to. Now this is where I'm so excited about this type of product line, and I love pumping my own money into this, is because this money grows tax favorable, right? It's not going to be taxed every single year that you have a gain into those accounts, like typical mutual funds, or if you have like a bank CD or a savings account, you get the 1099 at the end of the year. This grows. Anytime that there's a gain into the account, you're not getting taxed. It's growing on a tax favorable basis. Now, when I have this set up properly and understood exactly how to set these things up properly, and this is what I do with clients on a daily basis, is when you're ready to take this money out, you could take it out in a tax-free manner. So I don't have to worry about the marginal tax rates being through the roof by the time I'm ready to retire. This money will be coming out to me because I'm leveraging it the proper way, will come out to me in a tax-free manner. On top of it, I don't know if you guys were aware or not, but with any sort of 401k accounts or any sort of IRA or qualified retirement plans, there's something known as a 59.5 rule that takes place. So the amount of money that you place into any sort of qualified retirement plan, you cannot touch this money until age 59.5, and that's what's currently set up for all qualified retirement plans. You cannot touch the money, so the contributions and whatever this account is growing to that you've kept placing and overfunded your 401k account, you cannot take that money out before 59.5. Because if you do, then you get hit with a very large penalty. You get hit with the 10% penalty. Right now, this is currently what the penalty is. It could go up. And right now, you get hit with a 10% penalty plus whatever you took out in a full taxation, fully taxable, before 59.5. After 59.5, if you take it, it's going to come out to you guys fully taxable, meaning that, you know, if you're at that point in time, if you're in a 40% tax bracket, and let's say you took $100,000 out, $40,000 is going to go directly to taxes. So I want you guys to understand that with the way to set up the proper plans and to have that peace of mind in retirement, to have that peace of mind when you're utilizing the leveraging plan, the leveraging strategies. And remember, investing, I want you to think of this word as leverage, is I want to show you different things that we could eliminate the taxes or make it very tax favorable for you. We could beat the pace of inflation. We could eliminate the downward market losses, but still gain whenever the market goes up. So we could leverage exactly how the market performs, and we want to reduce our expenses as much as possible. So the product, once again, that I'm talking about is known as what we deemed in-house as an accumulation insurance contract. So please give us a call. I'm currently in the process of setting up an entire strategy to help educate all individuals on this sort of accumulation insurance contract. But give us a call, 1-800-566-1002. We leverage, there's hundreds of different contracts of the accumulation insurance contract out there, but there's about 2 or 3 of the top companies where this acts extremely favorable, and it's the same companies that I utilize for my own personal money. So please just give us a call, and we could educate you further on showing you the status quo, showing you what the mistakes that individuals are currently making with investments, revealing to you whether or not your plan is set up for for if you have some risk associated with your plan, or are you making sure that you're participating when the market goes up? Are you making sure that you're not participating whenever the market goes down? How exactly are you planning for retirement the proper way? Are you getting consistent rates of return? Can you utilize certain strategies that are already out there for all individuals to basically place their money either in these contracts or receive the best tax-free monies during their either retirement years or whenever they want to utilize that money and take money out of it? So, this is something, it is unbelievable. I'm so excited about. I've been, really researching the best types of things for several years, and without a doubt, I am so hooked on the accumulation insurance contract. This is something that I do for my personal money, and that's why I wanted to create a video. I wanted to kind of show you guys. I never had a video out there for investment for dummies, so I want to start at least hitting the surface and helping people understand how to properly either retire or how to properly leverage their dollars, their smallest amount of dollars possible, with the best possible end result. So once again, my name is Derek Afasi, owner of Afasi Financial Group. Give our 1-800 number a call, and you can give us a call at 24 hours a day, 7 days a week, and hopefully we can help you out. Take care, guys. Thanks.